So most of the traders are holding their breath, waiting for the markets to bounce. Well, I got some bad news for the bulls, great news for the short sellers. Guys, buy a shitload of puts because the price action in the last 2 days absolutely is pricing the case of stagflation. Now, you're going to hear exactly opposite. If you're going to listen to the news, you're going to hear a bunch of Wall Street analysts telling you to buy the fucking dip. Well, guess what they are doing? They're not buying the fucking dip. Why do you think there is no bounce? Hello, can you do the 2 plus 2? Anyone out there? If you need to use a calculator for that, you probably shouldn't be trading, damn it. It's very simple. If you observe the market conditions, we are officially in the middle of the biggest market collapse the world has ever seen in its history. Bigger than 1907, bigger than 1929, bigger than the stagflation case itself in 73, 74, bigger than the dot-com bubble. And guys, based off the news, you would start thinking, well, stagflation, these prices are going high. Lots of reports point to lower prices. Well, if Wall Street actually believed those reports, which, let's say, for the lack of the better word that I want to use at this moment, is inaccurate, okay? Wall Street does not believe in the validity of these reports. Pension funds do not believe in the validity of these reports because everybody knows prices have gone up while the reports point to lower prices. Well, either way you slice it, okay, if you're going to say, Leo, no, the report's 100% fucking accurate. Okay, if you believe the reports, then what you're looking at is a 2007, 2008 collapse. Okay, if you believe in the inaccuracy of the reports, then you have a 2007, 2008 type drop, but much deeper than the drop was in 2007, 2008. Okay, economic slowdown clearly should be applauded by the market over the last 2 reports. The CPI, oh, prices are not going up. Great. So inflation is not running so hot anymore. Today, PPI number, same thing. Oh, prices actually on month-to-month basis are dipping. They're going negative. How could these be bad? Now, Federal Reserve actually have the green light to go ahead and start the rate cuts. Well, guess what? Guess what they did in 2007, 2008? They got interest rates like fucking gazillion times. Did that save the market from a crash? No. When you begin cutting, when it is apparent the economy is going to hell, those type of rate cuts under those type of market conditions do not stop the market from dropping lower. They do not stop all of a sudden the bearishness that you have seen over the last 2 weeks to turn bullish. And yet, I mean, this is pure stupidity. I mean, listen to what Wells Fargo analyst says yesterday. His target price on S&P 500, check this out. You may need to sit down for this one. It's 7,070. Yeah, we're at 5,600 right now as I'm recording this. He's saying 7,070. Okay, so basically it's 1,570 points higher. But the question was asked after, how does he believe that target could be achieved? And he says rate cuts. And he says Fed is going to start cutting, market's going to go back up. Like, how does this guy get a job with Wells Fargo as the head of fucking analyst research? I don't fucking know. Did they just hand the job to fucking anybody that doesn't know shit about the fucking markets? I mean, that is ridiculous. But yet, I'm just using Wells Fargo as an example because it's just so fucking ridiculous, right? So then the second question they ask him is, well, since you think your target is 7,070 on S&P by the end of the year, do you think it's a good time to buy stocks right now? And his answer is like, well, no, I would wait. Right now is not a good time to buy because we can still go a little bit lower. Hello? Anybody home? Like, shit, are you serious? So if we go lower, he says, yes, we could easily go a little bit lower. He's not buying stocks right now. If you really believe S&P is going to go to 7,070 by the end of the fucking year, by the end of 2025, why wouldn't you buy stocks at 5,600? So anyways, the guy's just a walking contradiction. Everything he said doesn't make any fucking sense. So, and the reason I'm bringing this up is very simple. I mean, there's a shitload of Wall Street analysts like this. They're telling you targets that they know, okay, they're not going to hit. And they're telling you, yeah, it's going to go back up by the end of the year. But what are they doing? Well, according to him, he's not buying stocks. But if you're so fucking bullish, then put the money where your mouth is. They're not buying stocks. So for those of you sitting there, well, I want to buy the fucking dip. Oh my God, it's bouncing. Oh no, it's dropping again. You're going to keep doing the shit for the rest of the year unless you change your strategy now. Just understand this, the truth. You are in a heavy fucking bear market composition that, we haven't seen for ages. And every bounce may look good and enticing to go ahead and buy calls or buy stocks or whatever. All that shit is going to hold up only temporarily. And the next time you're going to look at your computer or the next time you're going to log on to your computer, the bounce is going to be gone. History. Because shit is going to be dropping again. So don't be doing nothing stupid like this. When you see bounces, do exactly the opposite. Bounce, what do? I buy fucking puts. Drop, collect some money. Bounce, I buy fucking puts. Because that's all the pension funds are still unloading shares. Let me tell you how ridiculous this is, just so you understand how serious this situation really is. So last time we had a 10% drop in the market was in the downturn of 2024 from July until August 5th. August 5th officially marked a 10-point drop on S&P and some other things. And guess what? Nobody needed a special invitation at that moment to come in and scoop up the shares of everything, basically. So immediately, as soon as we hit 10% lower, people are buying. Well, now we've been sitting 10% lower in S&P for 3 days, and you get data that would make you think, but it's bullish now, Fed is going to cut rates, and nobody's fucking buying. That's the difference in the market conditions. So in July, going into August 5th low, everybody was like, yeah, the economy is going to pump. We're going high. Boom, 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 boom. Nobody saw the stagflation case. I would bet you we were the only ones here at 13 Market Moves making fun of fucking Powell. I had a video clip I cut out and we posted back in July where Powell says, somebody asked him a question, hey, Mr. Powell, what do you think about a case of stagflation? And he's like, well, I don't see the stag and I don't see the flation. Well, price action right now in the market is telling you that now, not only Powell sees the stag and the fucking inflation, but the whole market. That's what they're focused on. The price action in the last 3 days tells you exactly that. Because there's only one thing that goes higher historically in stagflation. Guess what it is? Gold. Look at your fucking charts today. What is the only thing that's shooting to the fucking moon today? Gold. Gold chart looked weak as hell for the last couple of days, so we could have made the case, hey, it could drop off maybe 40 points easily. But it's not doing that. Based on the report of the data, normally when you expect rate cuts, right? That is something that would actually help gold go higher, guys. And that's exactly what's happening today. So, but then rate cuts are also good for stocks to go higher. Well, why are all the stocks fucking negative today? Even Microsoft. Like, why would I talk about Microsoft? Microsoft gets an upgrade from a Wall Street analyst. Microsoft is down 25% plus since the highs. So there's a brave guy, upgrades it, and guess what? Well, doesn't do shit for Microsoft stock. It's actually negative for the day. Microsoft shares are negative on a positive upgrade. What does that tell you? You're in a fucking bear market, damn it. I mean, I can give you case by case, instance after instance after instance, but just pay attention to the buy volume. Pull up a fucking chart, damn it. Look at the buy volume. Oh, you can't see it? You know why you can't see the buy volume? You know why those volume bars on the bounces, they're so small? Because nobody's fucking buying. That's the point. Okay, nobody's buying S&P in the last few days, and nobody's buying NASDAQ, which is even down more than S&P. NASDAQ is down 12, 13%. You would think it'd get a fucking bounce here. No, but can we count 200 points at some point yesterday as a bounce on S&P? No, I don't think so. Not when something is down 13%, okay, or over 2,000 points lower. And what are we? 2,600 points lower on NASDAQ, and nobody's buying that shit? What does that tell you? Stagflation, damn it. That's what that tells you. So price action, guys, if you look across the board, things are not moving higher on positive news. The market is pricing anything between a major severe economic slowdown to the worst possibility, which is stagflation. That's why you see gold moving higher and everything else lower. Now, the biggest trade that still has not materialized, guys, it's oil. Oil has not dropped off the cliff yet, but it's about to. So some of the biggest trades are going to be made on oil, but you got to make sure you don't trade oil stocks. Don't trade options on oil stocks. That's not going to make you as much. It's trading options on oil futures. So you need to make sure you get your account set up properly. Get in touch with 13 Market Moves by going to 13mmtv.com. Some of these oil trades in the next 10, 20 days, oil can make you millions with just 100 contracts, guys. Get 100 contracts of oil puts with certain strikes, close expirations. Those could make you more than you've made. Some of you you've been trading for 10 fucking years, you haven't made $1 million yet. So you can make more in the next 10, 20 days on oil puts than you've made in your whole last 10 years of trading. So, but some of you, unfortunately, you won't even take 10 minutes to set up your account properly to do this trade. So we're here to help. If you want to be a part of this trade, you need to get in touch with us because it's about to happen. This trade is about to play out right in front of your eyes, and you're going to be sitting there wondering, you're going to be sitting looking at oil drop $3 in a day, and you're going to be like, oh, what's the big deal there? Well, yeah, $3 fucking drop in oil gets you a trade of your lifetime, depending on your strikes and expirations. 6-point drop in oil gets you $1 million trade, guys, with certain strikes and expirations. So, and that move is coming. And nobody's expecting that move, just like nobody's expecting MSTR to drop. Why? Well, because MSTR is not going to break the orange line. It hasn't done it in years. Well, I'm saying it is going to fucking do it. Just like nobody's expecting oil to go below, 64. I'm saying it is absolutely going to fucking happen. And we're not very far from that moment. So there's colossal trades. You think, well, I'm buying the dip. I'm going to hold on and, ask people that bought the dip in 2007, 2008 transition. They had to wait 10 fucking years to recover from the dip. Do you want to be that guy? Like, it's ridiculous. So, anyway, guys, nobody's buying this market because at this point, the difference between July low and the lows in the last few days is the market understands they fucked up. And the market understands they fucked up because they listened to Powell in July meeting, and Powell said, look, I don't see the stag or deflation. Now, everyone is seeing the stag and deflation. So market conditions have changed in a meaningful way. You don't want to be the last guy buying the dips, because every time something's going to bounce, okay, they're going to sell into the bounce. They're going to sell into the bounce. And you're going to sit there and wonder, well, why aren't we going higher? Because every time you get a bounce, they're going to fucking dump their shares again and again and again. So some stocks, I mean, are trading at phenomenal levels right now. Like you take MSTR that's now trading at like, I'm recording this, it's trading at like 268. I mean, this is realistically, MSTR is like $20, $30 stock at best. And so there comes a moment where for the price of options, you could be buying shares of this thing. I'm not sure if you'd want to, because at the point of $20, $30 a share, it'd be on the verge of a bankruptcy. But the trade is very real, and the momentum to the downside could escalate at any given moment. So if you're missing these trades, I mean, you can't be mesmerized looking at some bounces on basically non-existent volume and think, okay, well, they're buying the market. Nobody is buying the fucking market. That's why the market is down 13% on NASDAQ and it can't bounce. That's why, S&P is down 10%, no bounce. No bounce on, I would say, artificially altered data that was designed to pump this market higher, but the market is not buying it. Wall Street is no longer buying this bullshit of, this AI growth story. It's over. And yet, you get a guy from Wells Fargo still thinks market's going to 7,070. I would say market has a higher probability of going to 2,400 on S&P by November. 24 to 2,800 is where the market's going to end up by November 2025. That probability is way greater than market hitting 7,000 points. Actually, his target is a little bit higher than that. He's like 7,070. Which is easy to do, right? When the market keeps going high for 3 fucking years, what do? Whoa, it's bullish. Oh, buy the dip. Yeah, well, all the dip buyers, they got so fucked in the last 2 weeks, and those that are still standing trying to buy the dip, they don't even understand. They don't even see it coming that the next leg lower in the market is about to happen today, tomorrow, next week. It's coming in a big way. So guys, learn to make money when markets drop. Learn to short the bear market on the bounces. If you don't have the discipline to do it yourself and pull the trigger when all of a sudden all candles look green on your screen, if you don't have the courage to pull the button, click the button at this point and buy them puts, then work with a coach who's going to tell you, no, this is your fucking entry. Yes, it's bouncing. That's where we buy puts. So there, to be a better trader, get some help if you need, but don't miss this beautiful market opportunity. Market conditions have changed. We have shifted from bull market to bear market officially. And based off the price action, okay, it's over for the bulls. Bounces are your friends. They're your best friends as a short seller. So wait for the right moment to short. Bounce, short. Bounce, short. Bounce, short. Guys, it's very simple when we talk about it, but it's very difficult for some people to execute it when these type of opportunities actually happen throughout the day. So go to 13mmtv.com, study the 13 market move sequences, understand the moves, understand the daily patterns, sign up to trade with the coach, guys. 13mmtv.com. Let's roll.